You have to understand US is ballpark a 30 trillion economy and US imports are just 3 trillion. So US import to GDP ratio is just about 10-11%. So what does it tell you? It tells you 90% of the US demand is made by domestic production. So US is an extremely closed economy. If you look at import to GDP ratio for India, it will be very close to 20%. So double of US. But having said that, since US is a 30 trillion economy and even with it 11% is imports are 3.3 trillion, which is almost equal to the size of India's GDP, it appears US is a big importer. US actually in relative to GDP is not a big importer. So therefore, until unless you are telling 90% of the economy will get severely impacted by the 10% of the economy, there is no reason to expect that US growth in 2025 will be negative. So our sense is that in 2025, US will grow by anything from 1.6 to 2% despite this tariff. But having said that, technically US can go into recession because US calculates GDP growth not on year-over-year basis, they calculate it on quarter-over-quarter basis. So if the GDP of January-March 25 is lower than that of October-December 24, or if the GDP of April-June 25 is lower than January-March 25, then you will say US has seen 2 quarters of negative growth and therefore technical recession. But while the technical recession is a possibility, we don't think US growth for 25 will be negative, and as I said, it will be between 1.6 to 2%. That's our estimate. So there is a growth slowdown, but there is no recession, deep recession kind of a thing which we expect in US. Now, if you look at in terms of inflation, if all the tariffs which have been proposed and now has been paused continues, US average tariff will go up from 2.5% to 25%. So there is a 22.5% increase in tariff rates by US. Now apply that increase on the import part, that is 11%. So multiply 22.5 by 11%, you will get a number 2.2%. So if 100% of the tariff hike is passed on to US consumers, then US inflation in 25 will go up to say to a 4.2% kind of a number. But obviously 100% pass through to the consumer is very unlikely. There are 3 parties involved here: the foreign exporter, the US importer, and the US consumer. The rule of thumb is that the impact gets passed on 1/3, 1/3, 1/3. So US consumer will face only 1/3 of the impact of the tariff hike, that is 2.2 divided by 3. That is 70 bips. So rather than 2%, US inflation might become 2.7%. So inflation going up, growth coming down, this is not a favorable situation. But having said that, this is neither stagflation nor a recession. So therefore, I think consensus is currently more concerned than what can happen to the US economy. In terms of equity market outlook, you have to understand that US is coming out of 2 years of bumper equity return. In 2023 and 2024, US generated more than 20% equity return. So with that, there was already valuations in US were overstretched. On the top of that, even now the consensus is expecting the earnings S&P 500 earnings growth of 14%. So I think there is over expectation both in terms of earnings growth, and valuations are still, despite the correction, the valuation during 2025 and some of it in April, despite that we think the valuations are stretched. So therefore we think fundamentally there could be some downside to US equities, not because of the Trump tariff effect, but more so because unrealistic earnings expectation and stretched valuation levels. So therefore US equity can remain flattish to slight negative bias in 2025. If that happens, we think the proportion of equity allocation by the international investors can go down substantially as compared to 24. But having said that, we have seen since late September 2024, there has been huge outflow of foreign portfolio investment from Indian equities, almost $30 billion. Major part of this money went to China and to US. Now, with these 2 countries are at the epicenter of the tariff war, so rather than inflow, these countries witness outflow, and in contrast, rather than seeing outflow, India is likely to witness inflow. So net, we think the global equity market will be flattish kind of a thing for the remainder of 2025, whereas we see significant upside to the Indian equity market in this horizon.